Chang in San Francisco, and this is Bloomberg Technology. Coming up in the next hour, Snap delivers strong first quarter results thanks in part to its new Android app. Daily active users increased for the first time in a year. Plus, Twitter reports positive results, saying product changes are drawing more consumers and advertisers, but concerns about hate and misinformation remain. I sit down with CFO Ned Siegel. And Google's drone unit has become the only drone firm approved as an airline by the U.S. FAA. What does this mean for the future of the industry? But first, to our top story, Snap shares surged after reporting first quarter results that exceeded already high expectations. The earnings giving investors another reason to be optimistic for a revival of the social media company. The parent of the photo messaging app Snapchat said sales rose 39% from the previous year to $320 million for 3 months ending March 31st. Snap also reporting 190 million people use the app daily, compared with 186 million in the fourth quarter. Bloomberg Tech's Garrett DeVink joins us now from New York. So Garrett, break it down for us.
Yeah, I mean, like you said, I guess in some ways Snap is back, but I just want to point out right off the bat that, the stock was closed about $12. It's up 10% now, so it'll be slightly higher than that. That's still a long way off from the $17 IPO price that this company went out with in 2017. It shot up right after the IPO, and since then it's been a really rough ride for this company as Facebook has stolen some of its key features, or, borrowed and used very successfully, maybe rather. And now, the company is really starting to sort of put out new features there, and like you said, the Android app seems to be moving the needle a bit here on user growth.
User growth did beat. I mean, analysts were expecting they would add maybe 600,000 users. Instead, they added more like 4 million users. Is that something that analysts believe Snap can sustain?
I mean, I'm not sure, exactly where that's going to go, but I do think it's a very positive sign when it comes to the Android rollout, right? Because Snap is a very kind of big app. It's a feature-heavy app. It has a lot of video, a lot of streaming, a lot of, things that take a lot of internet usage, and it's really been an app that's been best used on an iPhone, on sort of a more expensive phone. And now that they've redesigned their app from scratch for Android, which took a lot of work, took a lot of time, they've been talking about this for a long time now. If they can actually pull in, that whole universe of people, 85% of the world uses Android instead of Apple's iOS. And so that's a lot more people. And I think them kind of attributing this user growth to the Android boost does show, some positive signs for things to come.
You've obviously covered technology for a very long time. Malik of True Ventures joining us here in the studio. Do you think a real revival of Snap is possible?
Indeed it is. I think we are at that time in the social media environment where people are looking for a more private and a more controlled environment like Snap. I think there is a proper backlash to the more open social platforms like Twitter and Facebook. So there is a chance for Snapchat to bring in slightly older demographic back into the fold. They have lost a lot of that attention, mostly because of people prefer to go to Instagram and Facebook and Twitter.
And the product for some is hard to understand and difficult to use.
Well, I think it's hard to understand for older people. For younger people, it's not, because they're very native on the platform. And, it's like my nieces, they use it all the time, and they have no problems with it. I mean, it took me a while to figure it out, but I did.
I won't tell you which side of the spectrum I fall on. But Garrett, just a couple weeks ago, analysts from eMarketer said that Snap would lose users in the United States, that Instagram would be picking up those new users. Snap pushed back against that report really hard, said they were misinformed. But how do we square those two things?
Well, I mean, Snap was sitting on the numbers that they've now put out, and it turns out that they were right. I mean, it's always a tough game with this, right? And when you're talking about, you know, the internet, social media, and some of these things flying back and forth, and when we've been talking about concerns about Facebook, Twitter for a couple years now, but Instagram continues to grow, even though it is part of Facebook. And even Facebook had a great quarter last quarter, and you know the expectations for its results tomorrow are quite positive. So I think it's a tough business to sort of look at what's going on in society and say, okay, that means X, Y, and Z for these companies' bottom lines.
Now, as we've discussed, Facebook and Instagram have copied many of Snap's features to great success. You know, stories are now a huge thing on both of these services. Do you think that that kind of competition is something that Snap can continue to defeat?
Well, I think you have to think about it from a revenue standpoint. Snap invented the whole vertical advertising idea. Facebook and Instagram ran with it, made it pretty much an industry standard. Now that benefits Snap in a way that it can actually take a lot of advertising which has been created for those two platforms onto its platform. I think there is a lot of things which can go right for Snapchat, except Snap has to get over itself. I think the biggest enemy of Snap has been Snap itself, not...
What do you mean?
I mean, you know, they've been slow to move on things. They have been, you know, they have been dismissive of like emerging markets for growth opportunities. Android coming out in 2019 with an Android app, that is just a, you know, that's a B- in my books. It's like 90% of the world is on Android. Why are you not? Like that tells you that management had wrong priorities. They're too cool for school, and if they don't get that thing figured out, they will continue to be. And you know, it'll be like a, you know, they'll be like a great baseball player with a lot of potential, just not Mike Trout.
All right. Malik of True Ventures, you're sticking with us. Garrett DeVink for Bloomberg, thank you so much for weighing in. Meantime, Texas Instruments gave an upbeat forecast for second quarter sales and profit, bolstering optimism that the electronics industry is starting to emerge from a slide in demand. The company forecasts earnings will be as much as $1.32 a share on revenue as high as $3.74 billion. As one of the first chip companies to report for the March quarter, Texas Instruments provides investors with a view on demand across the industry. Coming up, more tech results. We're going to talk about Twitter's performance in the first quarter as it continues to clean up its platform. This is Bloomberg. Twitter surged the most since October 2017 in Tuesday's session after reporting first quarter sales and strong user growth. The social network beat estimates on both earnings and revenue and also posted an increase in monetizable daily active users to 134 million. This is Twitter's new self-reported metric. This as Twitter continues to crack down on the spread of misinformation and fake accounts. I sat down with Twitter CFO Ned Segal and asked about the company's growth strategy. Take a listen.
MDAU, and we've disclosed the percentage growth for the last 9 quarters now. It's been growing in this range of 9 to 14 or 15% for the last couple of years. The work for us is to get out of that range by continuing to improve the service and give people a great experience when they come to Twitter. So we're always working on improving the timeline, improving relevance of the notifications that we send you. We'll do work this year to improve onboarding. We've got this great prototype app now where you can see the things that we're experimenting with, and we'll bring the best of those to the platform over time.
So are you expecting that number to grow as quickly as it has grown?
Well, we're working hard to make it grow, and we'll have to see what it does over time. Generally, you see a big seasonal uptick in the first quarter where there's a large absolute growth in the first quarter, and then the work for us is to sustain that in terms of percentage growth over the course of the year. But there are events and typical seasonality that tend to help that number on an absolute basis in Q1.
Now, some analysts are saying this new number is not very transparent. We don't know how you decide what is a monetizable daily active user. So should we be concerned about that? And can you give us a little bit more information?
We actually feel like it's perfect transparency because it's the number that we goal against internally. So monetizable daily active users are people who go to twitter.com or to one of the apps that you'd use on your phone, who log in and who can see ads every day. So we can't think of a number that'd be more simple or transparent than that to share with people. And importantly, it's the exact number that we goal against internally. We had been sharing a number externally for some time, which was monthly active usage. If we get people to come to Twitter once a month, we have failed. We're not delivering for them. We want people to come every day. We want them to see value in Twitter and keep coming back to find about the things that are happening in the world and what people are talking about.
Monthly active users, that's the number you're going to stop reporting.
That's right.
As of this quarter, though it's continuing to decline. International growth seems to be slowing down. Your revenue guidance for Q2 was a little light. Should we be worried about those?
So a couple things in there. On MAU, MAU is a more inclusive metric. It includes people who get text messages with tweets in them and things that we're not designing around right now that aren't about the best experience you can get with Twitter. So that number had moved around a bit over the last year. While DAU was going up, MAU was going down. They're apples and oranges. In terms of revenue growth, remember we drove this broad recovery that began last year outside of the United States. So the comps are tougher internationally in the first half of this year. They get harder in the second half of the year in the United States. That's not meant as an excuse. It's just the math and how it works. The challenge for us and the work that we'll endeavor to undertake all year is continuing to improve the ad products, continuing to drive better relevance and better ad formats so that we can deliver great results regardless of what the growth rates were last year.
You've been working on improving the health of the platform. You say 38% of content is now being flagged by technology and flagged for human review. Is that correct? So
38% of the abusive tweets that we ultimately review are being flagged by machine learning as opposed to by humans. That's correct.
How much, realistically, can you get that number up? How much more work can the technology do and how fast?
Well, we think it can do more. And it'll be hard to get to perfect, but the goal is for us to have really clear policies, to have a product that can enforce the policies, and to have really good people behind the product who can support the product in supporting the policies. So hopefully that 38% goes up, but we're really proud of the progress that we're making.
Now, still, there continue to be concerns about hate, misinformation, fake news spreading on social media. We recently had this situation in Sri Lanka. A series of bombings and social media was completely shut down. Was Twitter shut down in Sri Lanka?
So instead of talking about specific examples, let me talk more broadly about how we think about these things. We're in this incredibly dynamic environment where people are using platforms like Twitter in different ways all the time. And we need to both be respectful of the tragedies that sometimes will occur. We need to be thoughtful about how perpetrators use the platform, how victims use it, how people who are seeking news who are 10,000 miles away use a service like Twitter to make sure that people can trust the information that they find and that they're comfortable being a part of the conversation.
That said, what's interesting about the Sri Lanka situation is that the government shut down these services without any evidence that the crime was spun up on social media, but because they were concerned about misinformation and violence spreading on social media in the aftermath. I mean, isn't that a concern, that that is the first reaction of an entire country?
Well, it tells you that there's still work for us to do, and certainly for others to do as well, in making sure that people can trust the information on a service like ours, that it's being used appropriately. It's the reason why health is our #1 priority, both from a resourcing perspective and from a mindset perspective.
My interview there with Twitter CFO Ned Siegel. I want to bring back True Ventures partner Malik, and on the phone we've got Forrester senior analyst Jessica Liu. So Jessica, you heard Ned's responses there. What do you make of his answers when it comes specifically to improving the health of the platform?
Yeah, I think it's all good efforts by them, but they have a lot of work to do. The social network is still riddled with issues. I feel like the sort of small product tweaks that they've made so far, like hiding comments or allowing comments to be hidden, sort of their party line about machine learning and AI is detecting abuse, he said 38%, and sort of continuing to rely on users to self-report or police. Those efforts aren't going to change the social network dramatically. I would love to see a stronger position on proactive content moderation and regulation policies, explicitly stating what's banned, what's allowed versus what's banned. Harder and more consistent evidence of how they're handling bad actors would be helpful to see from them. Are they banning them for life? Are they not allowing them onto the social network to begin with? And then it would be great to see the voice of the users, running some periodic user tests or surveys to see the actual impact of these cleanup efforts. Is the overall health improving from the user perspective? I feel like all those questions and answers, quite frankly, are missing.
Would you agree?
I do agree with Jessica, but I also understand that this is not an easy problem to solve. I think the challenge for any information system is to actually start to distinguish between rumors, information, news, and half-truths. And I think it is much more difficult thing to achieve than we on the outside like to think. But I definitely think Twitter should be doing more than they are currently. They should be looking for ways to validate the actual accounts much more strictly than they are right now. I think there is a lot of low-hanging fruit they could be plucking right now to make it better.
On that note, Jessica, you mentioned that you felt that this new monetizable daily active users metric was not very transparent. Ned responded to that concern there, and we see that number growing, but of course it is a number that Twitter chooses. Did his answer there satisfy you?
Yes and no. He answered the question of how Twitter is defining MDAU, or monetizable daily active users, so that was helpful to hear directly from Twitter. However, those numbers make Twitter look good. I realize, yes, it helps them with stopping their double counting and including, or I should say excluding, fake users. But when Twitter's users numbers look better, the ad pricing and advertisers' media plans hinge on those user numbers and those impressions. So social networks finding a way to improve their user numbers help boost their ad revenue in the long run. And so there's sort of this ripple effect that happens in media buying, and selfishly, from Twitter's standpoint, to find a number that helps them improve on the user front is good for them. So there's sort of a hidden incentive, if you will, there.
Meantime, minutes after I sat down with Ned Siegel, news crossed that Jack Dorsey, the CEO of Twitter, had just met with President Trump in a closed-door meeting. We don't know a lot about the meeting. Twitter isn't commenting on the meeting, but the president did tweet about it. He said, "Great meeting this afternoon at the White House with Jack Dorsey from Twitter. Lots of subjects discussed regarding their platform and the world of social media in general. Look forward to keeping an open dialogue." This on the same day that the president was complaining about how Republicans are treated on Twitter. He's complained about Twitter in doing some of this account cleaning up. The president himself has lost followers. Jack Dorsey has also lost followers. But I can't recall Mark Zuckerberg meeting with President Trump. What do you make of this?
Well, Tim Apple met the president.
Apple met with President Trump.
And
right.
If Satya has met the president, the thing is, if he is the president of the country and if he wants to meet an executive, saying no is a choice you make, but as a citizen of the country, you do actually go, you may not like the person, but you still have to go and meet the president.
And maybe we're not seeing it in the growth numbers, but Twitter is a huge part of the national conversation, and it is the president's platform of choice.
It is where news happens now. It's not on CNN, it's not on any other network, it is on Twitter. That's where the genesis of information is, and everything, comes from there. So it is an important platform. There is a lot of work to do for these guys, but you can't hold up a CEO responsible for going and meeting the president. Yes, there's a lot of people in Silicon Valley who do not appreciate the president, but that doesn't mean he shouldn't go. Right. That's how I feel.
And Twitter has said over and over again, the importance of reflecting different views. You're sticking with me. Jessica Liu of Forrester, thanks so much for calling in. I should mention Bloomberg LP, the parent company of Bloomberg News, produces TikTok, which is a global breaking news service for Twitter. All right, coming up, we're going to be talking about Facebook filling some top positions as the social network prepares for more regulatory hurdles and pushback in 2019. Details next. This is Bloomberg. Facebook made 2 high-profile hires this week. The company named Jennifer Newstead as its general counsel and John Pinette as its new vice president of global communications. So what does it signal for Facebook's strategy going forward as it wades through backlash, controversies, and the threat of regulation? Still with us, Malik of True Ventures. So Jennifer Newstead, longtime corporate lawyer in Washington, focused on regulation. She was, for a short period of time, an advisor to the State Department. John Pinette worked for Bill Gates, also credited with writing parts of the Patriot Act, which expanded law enforcement's ability to conduct surveillance after 9/11. We talked earlier about the possibility of a Snap revival. You're optimistic about that. Do you think Facebook can claw itself out of this mess of scandals and controversy?
So one of the key things you have to think about Facebook is who are the people they're hiring. In the last 2 to 3 years, this company has been hiring people from the political spectrum, whether it was the accidental hiring of the Dreamers or whatever that organization was, or bringing in politicians to represent the company's PR. Nick Clegg and a few others. So you're looking at a company which is increasingly understands that its battle is going to be legislative. It's going to be will be fought in Washington, and I think it's preparing for that. I don't think this company improves in any particular manner. The people they are hiring right now, they are here to defend its actions, not to improve its actions. This company is not changing.
What about the battle with users?
Users and Facebook have never been aligned at all. It's been Facebook's world is all about Facebook and Mark Zuckerberg. All the stories which have come out in the last few weeks tell you again and again and again that Facebook has only one incentive, to look out for Facebook. Users are just pawns to be pushed aside.
You deleted your Facebook account long ago, as we have discussed, but you still use Instagram
once or twice a month.
Do you think Instagram or maybe WhatsApp can be the hope for Facebook, the future?
I think I see what's happening at Instagram, and they're becoming more Facebook-like. So it's only a matter of time before I delete that account.
All right. If you could predict where Facebook is next year, what do you predict?
Right here. We are all outraging about their actions. They're still making money. The investors are super happy with them, and politicians are making noises that we should do something about them.
All right. I should correct myself earlier. It's Jennifer Newstead who is credited with writing parts of the Patriot Act, not John Pinette, but it will be interesting to see how both of these new hires work out for Facebook. Obviously, we've seen a lot of executive turnover. These are two new players on the chess board. True Ventures partner Malik, always good to have you with us. Thank you. Coming up, Lyft has gained new buy ratings at 5 firms. What these analysts are saying about the company's long-term opportunities next. And later in the show, cleared for takeoff, Alphabet's drone delivery service gets an unprecedented clearance from federal authorities. We'll look at what it means for the future of unmanned deliveries. This is Bloomberg. Technology. I'm Emily Chang in San Francisco. The NASDAQ 100 is on a tear, hitting record after record. But the upward push is being driven by just a handful of familiar names, with 4 adding half its gains this month. Those 4: Apple, Amazon, Microsoft, and Facebook. These companies have collectively contributed about 50% of the NASDAQ's gain. It's in April. Joining us to discuss Bloomberg's Romain Bostic in New York. So, Romain, what do you think are the main drivers of this rally?
Yeah, I mean, it's interesting, the intro you have. I mean, that's 50% of the gains, of the point gains on the NASDAQ 100. In fact, if you throw in Cisco and Intel in there, it's basically about 60% of the point gains that we've had since that December 24th low have basically come from 6 or 7 stocks. So you have to sort of wonder just how much further this rally can go if you don't get a little bit more participation from some of the smaller companies. And that's really sort of been the issue here. A lot of analysts basically say that, hey, it's fine. We can sort of, ride this wave off of those big companies, but at some point you run into that wall, and if you don't have these smaller companies sort of participating in the rally, then that rally is going to fade out pretty fast.
All right. So the question is, will this momentum keep up?
Well, the short answer is there has some potential. Look, I mean, we came into this earnings season with a pretty low bar, and there does seem to be at least some sort of narrative here that the growth story is in check, at least for some of these companies, particularly on the software as services side and on the cloud services side. You're still seeing some weakness in semiconductors and in hardware. I should point out, when you look at the price action over the last couple of days, you saw some huge block trades move across the tape, people sort of buying into this rally, not only in the individual stocks, but we saw it on some of the ETFs as well, like the VGT, and that at least is a signal that some of the bigger buyers do see this as an opportunity to get in.
Meantime, Lyft has been upgraded by 4 different analysts after, days and days of sort of negative sentiment following the company's IPO. Shares still ended the day about 1% lower, but why suddenly all these analysts coming out with good news?
Well, I think most of these analysts, if you really read their notes carefully, they're really focused on the long-term growth story. They're really not necessarily looking out 1, even 2 years. And most of them, even though they were quite bullish on it, they did have a lot of caveats with regards to the company potentially moving to a more autonomous driving type of a system, as well as to it's just sort of beating back the competition. Credit Suisse has the highest price target on this company, a 12-month price target of 26. Jefferies has a little bit of, 96, and Jefferies has a price target of around 86. And I should point out, when Jefferies, with its price target, it basically said, look, it can reach this price target primarily because it has a much younger base. It also has is positioned itself in certain cities a little bit better than Uber, and that's going to give it a little bit growth potential. But a lot of the value in this stock, a lot of the value in this company is going to be how much it controls costs, and then you're going to see that reflected in the share price, either up or down, depending on how that shakes out over the next few weeks.
Well, it'll be really interesting once Uber gets out of the gate to see the comparisons between Uber and Lyft, won't it? And will coverage of one impact coverage of the other?
It certainly will. I mean, most analysts say that Uber is going to steal a lot of thunder from Lyft once it actually comes to market. There are a lot of folks who look at these two companies as being identical. Of course, both Uber and Lyft, I think, would make an argument that they're not necessarily one and the same, that they have slightly different business models. And some analysts say they should be valued differently, and they should even be included in portfolios together, almost as companions or counterweights to each other. So it's really going to be about how portfolio managers view these companies, view their narratives, and make a decision. Do I own one or the other, or maybe can I own both?
All right, Romain Bostic, our co-host of What'd You Miss? Thank you so much, Romain, for stopping by. Well, moving on to streaming, Netflix is returning to the junk bond market. Facing increased competition from new streaming services from the likes of Disney and Apple, Netflix is selling $2 billion worth of bonds in a 2-part offer. And that's some much-needed funding for a company that has burned through cash for 19 straight quarters. To discuss in New York, we've got Bloomberg's corporate finance reporter, Molly Smith. So obviously, Molly, Netflix is making a lot of investments in original content, but at what point is Wall Street going to be less forgiving?
Well, we haven't reached that point yet, Emily. This is, like you said, a company that has been continually cash flow negative and looks to be for the foreseeable future, with Netflix, even by its own estimations, looking to burn through $3.5 billion of cash this year. So far, we haven't reached that turning point in the story. But as management said last week, they are expecting their financing needs to shrink starting next year, and that the bond sales are going to shrink with it, so that the company is going to move toward more of a self-funded and ultimately profitable model.
So do we have any more detail on where they will spend this money? I know they've used this term, general corporate purposes.
Yeah, so they give us a little bit of guidance. So it's general corporate purposes, but that can include content acquisitions. It can include development and production. It can include acquisitions more broadly. So they really do use this one catch-all umbrella term that many companies use in their use of proceeds. But for Netflix, it's really been all about generating content growth. So that's really been where the bulk of the dollars being spent are. I think that they're planning to invest, what is it, $15 billion in content this year alone. So clearly that is where a lot of the money is going toward. And that's what the story has been with Netflix all along and why they continue to be cash flow negative.
And of course, coming competition from Disney, unveiling their new streaming service later this year. Same with Apple, Warner Media as well. Is there any indication of when Netflix's financing needs will start to subside?
So they're expecting for that to start next year in 2020. But I'm glad that you brought up that point about the other competitions that's thickening with these other streaming services and what offerings they could be providing, because a lot of those companies, Apple, Disney and Amazon, have thought to be possible acquirers of Netflix in the past. And for bondholders of Netflix, I mean, that would be an immense positive if you could be taken out by a really strong investment grade company like any of those three and have that kind of a balance sheet to support your borrowing.
All right, well, we will stay tuned. Bloomberg's Molly Smith, thanks so much for weighing in.
Thanks.
Meantime, CBS has suspended its search for a new chief executive officer and said acting CEO Joseph Iannello agreed to stay on through the end of the year. In a statement, the company said, "We're very pleased to recognize Joe's talents and efforts with this extension, and we look forward to all that he will continue to do to build on CBS's remarkable momentum." Iannello took over after longtime chief Les Moonves was ousted over allegations of sexual misconduct. Coming up, how Uber is trying to fix the company's relationship with local law enforcement across the globe as it prepares to go public. This is Bloomberg. Uber has discovered a way to get police departments on its side, it hopes. The company is now sharing its ride data with law enforcement. Bloomberg Businessweek has the story. Editor Brett Began joining us now. So, Brett, what exactly is Uber sharing with law enforcement?
Yeah, so remember they have 15 million rides a day, 3 million drivers. So they have a little bit of everything, to be honest with you. They've got your driver's license number, they have vehicle and insurance information, they also have GPS data, and they use AI to look at facial recognition, and that sort of actually can help prevent people using multiple aliases. So they have a little bit of everything on offer.
Now, in the past, Uber has had a contentious relationship with law enforcement and is indeed being investigated for criminal and illegal activities around the globe. Are police departments buying this?
Well, what the police departments are trying to do in the establishment of these global law enforcement teams that we write about is really try to find a way to liaise with the company and for the company to liaise with them. Their argument is that, look, they're on the ground in a different way than other tech companies are, and they have to treat things differently. But you're right. I mean, Bloomberg Businessweek itself has reported more than 24 instances of them trying to shield files from local law enforcement. But in our reporting, what we found is these very sort of intimate conversations with people involved in cybersecurity, where they're trying to show local cops, hey, look what we have, we can be of help.
So talk to us a little bit more about the global law enforcement team and some specific cases that they've been working on.
Sure. So there's about 70 members right now. It's really been growing, and they liaise with about 300 different agencies in 51 countries. And a couple of things that they've been involved with, for instance, with the London Bridge attack in 2017, they helped to establish a geofence around there so no one potentially involved in the attack could escape. They were also helpful in the Parkland shooting, actually last year, where they informed the Broward County Sheriff's Office that the alleged shooter had actually taken an Uber to the school. So they've been involved in those. There were also attempts to be helpful during the Parisian terrorist attacks in 2015.
What do privacy activists and advocates think about all this?
Yeah, well, you can imagine that they're not that excited about this. I mean, Uber does have a history of mismanaging data. In September, they agreed to pay $148 million to settle a data breach. But more importantly, if you use Uber, if you've signed up for Uber, your information can and probably will be shared in the kind of requests that police departments make to Uber. And in instances like the Parisian attack, there was an Uber driver who thought that he actually had one of the terrorists in his car and thought he was being helpful in reporting it to Uber. It actually turned out that this person that he had as a passenger was just an international businessman whose traffic patterns happened to sort of mimic that of the terrorists, but he got swept up in this thing. And it's very easy for your information to be shared in that way.
So if you could look out, let's say, 1 to 2 years, obviously this is a company that's changing very fast. What do you imagine the relationship between Uber and police departments will be? Because yes, as you say, this is critical information, but it is also private information.
Yeah, well, look, as companies like Uber grow, as we know, they start to think of different considerations. And I don't think it's coincidental that the growth of this team comes right before their IPO. So what I can imagine happening is only a further sharing of this level of information across more of these global law enforcement teams. You've got 4 agencies open right now, the largest of which is in Amsterdam, but the company's announced 2 more. We've got one opening in Mexico and one opening in Brazil. And my guess is they're going to continue to open these to try to facilitate this information sharing.
All right, Bloomberg's Brett Began, fascinating story. You can read the full story in the upcoming edition of Bloomberg Business Week and hear from our magazine's reporters and editors every Saturday and Sunday on Bloomberg TV and radio. Moving on now to Alphabet. Its delivery drone operator got certified as an airline by the Federal Aviation Administration. So what does this mean? Well, the unit, called Wing, can now begin routine deliveries in U.S. skies. And they're beginning with deliveries in a pair of rural areas in Virginia in a couple of months. To tell us more, we've got our Bloomberg aviation reporter, Alan Levin, in Washington. So, Alan, this is kind of a big deal. What does this mean?
Well, it means that they really can start taking money for deliveries. Up to now, they've been able to deliver things, but it could only do it as a demonstration, and so that moves it forward. But I have to say, in terms of significance, I would almost say it's as important for other other aspects of the drone world as well, because this creates a roadmap for any drone company to become a part of the mainstream aviation community, and that means companies that want to fly these in construction sites or do long-range surveillance of things like bridges and that sort of thing. It really opens up all sorts of commercial opportunities.
So what exactly are they going to be doing in Virginia?
I think a little bit of what they're trying to do is just test the market. The Wing model, unlike Amazon, where they already are giant retailers, they're going to partner with local merchants and sell items. And I think part of what they're trying to do is see exactly what will sell and what will not. Do people want to get an instant tube of sunscreen, or are they more interested in burritos? It's a little bit of trial and error. But that's what they're hoping to do, starting, as you say, in just a couple months. And
what about the safety issues? I mean, are they going to tell everyone in Virginia, hey, something might be falling out of the sky, and going forward? I mean, there's still many, many outstanding concerns.
So there are definitely concerns. The folks at Wing are going to spend a considerable amount of time in the next 2 to 3 months working with the local community to try to smooth over feelings to make sure that there's no backlash. But I do want to mention, in terms of falling out of the sky, the reason that the FAA was able to certify Wing's operation is that they have a high degree of confidence that their aircraft will not be falling out of the sky. Now, you can't say that about the drones you're buying over the internet for hobby use. They're not nearly as robust, but this has multiple backups and that sort of thing, and they've conducted thousands of flights, some here in the US, but a lot in Australia, and that's what gave FAA confidence that they had enough robust backup system so that wouldn't be happening.
All right, that is somewhat reassuring. We'll be watching to see how this plays out. Bloomberg's Alan Levin, our aviation reporter, thanks so much for that. Still ahead, construction is one of the largest industries as yet untapped by technology. PLANGRID is bringing construction into the digital age. We'll talk to the founder next. This is Bloomberg. SoftBank is considering an investment in WIRECARD that could give it a 5% stake in the beleaguered German online payments firm. The Japanese conglomerate has hired financial advisors and may buy bonds that can be converted into WIRECARD shares. People familiar with the matter say a cash injection could help shore up investor confidence in WIRECARD after alleged accounting wrongdoing at the company's Singapore operations. Well, the global construction industry is valued at over $10 trillion, yet it's been notoriously slow to catch up with technology. According to McKinsey data, construction inefficiency costs the global economy $1.6 trillion a year, and construction projects regularly lose up to a third of their value because of it. PLANGRID wants to close that gap. The software company gives general contractors, owners, and architects the ability to collaborate on digital blueprints in real time, and it claims that its mobile-first technology saves users roughly 7 hours a week. Joining us to discuss, PLANGRID co-founder Tracy Young. Tracy, good to have you here on the show.
Thanks for having me.
So how penetrated is the construction industry as of now by technology? Like, how much opportunity is there?
Well, I mean, every construction project uses Microsoft Office, but in terms of accessing the construction record set, which is the problem that we solve, most projects are still being ran off paper and pen.
So how penetrated is the construction industry by PLANGRID? I mean, how much
We've done pretty well.
How far is your reach at this point?
In the last 7 years, 1.5 million projects have been built with PLANGRID, and this is from the smallest kitchen remodels to the largest projects in the world.
So talk to us about how you help contractors. What is it? I mean, it makes sense, but sort of bring to life for me. You're giving them the ability to create 2D, 3D models, for example.
Sure thing. So as a contractor, your job is to take the drawings and specifications and then translate them to physical structures. And part of that means that you need access to all of the construction information. And with paper, it's just hard, because on a building like this, the initial set could be 10,000 sheets of paper. So how do you bring that into the field? Well, super simple solution with PLANGRID: put it in the cloud, make them available on mobile devices. When things change, hit publish, and then everyone gets access and updates from their mobile devices.
Now, you recently got bought by Autodesk. How does that change your operations?
A lot of things haven't changed, and a lot of things have changed as well. We were a 400-person firm getting integrated into a 1,000-person Autodesk construction solutions group into a 10,000-person company. And so the one big change that comes to mind is I have a boss now for the first time in 7 years named Jim.
Now, construction can be cyclical, and I wonder how that impacts your business. Like, when there's an economic downturn, could that spell trouble for PLANGRID?
What we see is investment in construction is still massive. It has to be. Construction is the infrastructure of the world. There's a shift, though, from commercial Class A office buildings and really expensive condominiums over to infrastructure projects. The government actually pours a ton of money into rebuilding our deteriorating infrastructure to keep employment rate up.
So that's an opportunity then?
It is an opportunity, and I will say that our population is increasing rapidly, and there just isn't enough housing and infrastructure to support the growth.
So when you sort of model your own outlook for, let's say, the next 1 to 2 years. Do you factor in the economy and what's happening on a macro level?
It's certainly on our minds and in every discussion at the leadership level. We do believe that the emerging markets will keep the economy going, the global economy going, and so we're incredibly proud that PLANGRID's being used in over 100 countries right now. You're
announcing a new product, building modeling information. Tell me how this works.
Yeah, building information modeling. Now that we're a part of Autodesk, then one of the nice perks is we get access to their technology. And so as the leaders of design, we are now bringing design directly into the field. And we have launched PLANGRID BIM today for the field, and it gives our users the ability to be in 2D, access the information directly from PLANGRID, and then also with one tap, switch over to 3D in BIM. And so you can go back and forth from 2D to 3D. And I will say that we couldn't have built this as fast without access to Autodesk.
Now, you have risen to the top of 2 male-dominated industries, the tech industry and the construction industry. So what kind of advice do you have for the women who come after you?
I think this advice would be good for males too. Work hard and don't complain.
All right, so when looking at the construction and trends in construction and technology in construction, what should we be looking out for in the next year, 1 to 5 years? What sort of trends are you expecting to see?
We just have to become more productive as an industry, and that means, given that construction is crucial to the economy and environment and society, we have to do better as an industry. And that means the materials we use that's less negatively impacts our earth, to the amount of time we spend building these projects, because we just cannot afford wasting time. We have to deliver the world's infrastructure, or else the people who will suffer the most isn't me or you, it's everyone who's less fortunate than us.
All right, PLANGRID co-founder Tracy Young, good to have you here.
Thanks for having me
on the show. Thank you so much for stopping by. That does it for this edition of Bloomberg Technology. We've got lots more earnings coverage coming up this week. Facebook, Tesla, Microsoft, PayPal, all reporting results. We will be across all of it. And remember, we're live streaming on Twitter. You can check us out at Technology and follow our global breaking news network, TikTok, on Twitter. This is Bloomberg.